All right, meantime, bond yields, they are down across the board on that social media post and kind of a risk-off perspective of this entire market. Let's bring in Rick Santelli to kind of make sense of all this. Rick, I'm looking at a 10-year at 4.05%. One day, I get it, not a trend. Is there a risk here of sub-4?
You know, I think there is a risk, but I also think the catalyst for this move makes the risk of a test of 4% on a closing basis less technically significant. So, as you see the charts I put in, the NASDAQ was what I picked, of course, because all you technicians out there, it's having what we call a key reversal day. Higher high and lower low than yesterday, and certainly looks to close below yesterday's low. And what makes it a key reversal is that the high it made today was a new intraday all-time high before it reversed lower. Now, we've had a couple of these already, so I would caution that many would like to see 2 out of the 3 indices have key reversals before jumping on it, and the catalyst being such an exogenous issue versus something internally with the markets. Now, we're making new low yields across the entire Treasury curve right now, 2s through 30s, Brian, and as you look at the chart, a couple of things should jump out. First of all, we're on pace now to close at about a 3-week low in 10s, which underscores that as big a move as it seems on the day, because we settled at 414 in a 10, so we're down close to 10 basis points. We also settled at 412 last Friday, which means on the week we're only down about 7 or 8 basis points. Now, I'm not dismissing that, but it isn't as huge as one would think considering the news, and I think that really states it all, that ultimately the markets, in my opinion, are believing that this, like all the other tariff issues that were market moving, has a half-life that is pretty short. Now, the dollar index, look at the dollar. It's pretty amazing, actually. Yes, it got hit, but it's still sitting around 99. It settled last week at like 97 3/4, so it's up substantially on the week. I think that's a positive sign, and it gives me a little bit more confidence that today's move, as important as it is for the reasons of tariffs, just isn't going to be around very long.
Well, you heard, Rick, my earlier point to the guest, which is, to Senator Gregg, that if there is some change over the weekend, we get some different social media post or commentary that everything's fine with China and they had a good phone call, does everything reverse and kind of rip the other way?
Yeah, I think absolutely it does. I'm not sure how much of a rip we get, because, as I said, when you look at the Treasury complex and the dollar index, it really isn't ripping even right now. But I think it would reverse much of what's going on. I think for 10s, the significance of today is which side of 4% we close at. And the next time we get a headline that dismisses some of the tariff intensity, how quickly it may move back above that level.